Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the 30th of January. It is a Wednesday, and it was anything but boring today. We've seen a handful of kind of slow days in the market this past week or so. Today was not one of them. And good afternoon, Zach. Good afternoon, Adam. Hello, everyone. I hope you all had a great day trading. Of course, great day out of the market as well. We are in earnings season. We had some Fed speak, a little on the dovish side, preaching patience. And what do traders and investors do? They buy, right? Where's the irony there? So we'll definitely take a look at how that impacted our charts. We'll see what it did. Before we do, of course, earnings are not done. We're done with Apple earnings. That's old news. We're done with Fed. That's old news. Now we're jumping into earnings tonight. We've got Facebook, who looks like they beat the number. We're up about 7% in the after-hour market. Tesla initial reaction appeared to be down, although I didn't really get to see what the report looked like. Microsoft seemed like it was a little bit mixed, and they were down around 3% after hours. So still big names, and those are just the huge names. Lots are coming our way here tomorrow for sure. You're in earnings season when you look at who were the big movers and gainers and losers on the day. Juniper, these are our biggest S&P 500 losers. Juniper earnings, Ben earnings, Lumina earnings, AT&T, T-Rowe, Amgen, Whirlpool. No, they had their earnings yesterday. Looked like some profit taking. PFG earnings, GD earnings, CBOE. I don't know. I think they had theirs a bit ago. IVZ earnings. So most of our top percentage losers are earnings related here today. And on the flip side, you guessed it, earnings are what's leading the way on the winner. Almost 20% day for AMD on what I didn't think was the greatest report ever, but good guidance, I guess. We hear what we want to hear, right? SYK looked to me, at least in my opinion, had a really solid earnings report. That was one of the better reports I saw. Anthem, a little bit of healthcare. We saw some mix in the healthcare. We've got another big round of healthcare earnings coming out tomorrow. So it is earnings season. It is always interesting, no doubt about it. So as we kind of move over to our indexes, here we are on the 15-minute chart for the S&P 500. Nice little gap on the open, little bit of drifting for a bit before kind of breaking and then pulling back a little before the Fed meeting. And then the rest, as they say, is history. Buyers really stepped in, some profit taking towards the end of the day. But really, this is what most of our broad markets, and to be honest, many of our sectors are going to be looking like here today. Not to throw any cold water on the bull party, but we are, we did take out that high from last week. We're right into that trend line, just below that 2,700 on the S&P 500. So that will be something to be keeping an eye on. Wasn't able to push through. I'm not saying that's bearish. I'm not saying that it'll stop me from having bullish trades or anything like that. But it is one last challenge that we're going to have to deal with over on the S&P 500. Of course, pretty much everything else, we are in pretty good shape, well above all the averages. Flat 200, kind of the next maybe level of resistance if we can take out this 2,700 trend line area, which based on the momentum seems like maybe that's not too much of a stretch to ask for. And good afternoon to everyone who just joined us. It is always great to see you guys. Hope you're having a great little Wednesday. Week's going by fast, no doubt about it. NASDAQ able to close above that 6,800. If nothing else, a little bit of a psychological victory. We need to probably see a little follow through. I think from a very aggressive perspective, we could call this a break, whereas I don't think we could make the same case personally in the S&P. A little bit of upward movement would make me feel a little bit better about calling this a break. But if we want to get purely technical, we did take out 6,800, which is certainly an area that we've been watching, not just us, pretty much traders across the board. as we've talked about before, really not much until we get, above, 7. Maybe we'll call it 7, a big round number, just below that 200 period moving average, albeit flat. So that's probably the next stop if we can carry through, in my opinion, at least, on this breakout. So it has been that day. Now, over in the Dow, we did get a push, and I think we could say a break over in the Dow Jones, closing above 25,000 here today. Boeing came out with a fantastic, in my opinion, earnings report. Of course, the market really responded in kind. We'll take a look at them before we get out of here. Ran right up near their all-time highs. Maybe they'll consolidate for a week or so and then break out for us. I don't know. We'll have to ask and we'll have to follow. But you're absolutely right, Zach. A lot of strength here today. Again, we've been boring, but we haven't seen any sell signals across the board being generated. And then, kind of getting that momentum here today, at least in the short term, traders do seem to be on board with it. Quite a bit of room, until we probably work towards that 26. I mean, that's really the key takeaway, as we've been looking at these charts, as it's been consolidating the last week or so, and we've had time to think about it because it didn't really do much different today than, up until today, of course, is there's a lot of room, there's not a lot of resistance sitting on top of us in our broad indexes. Over in the Russell, again, I think you could maybe argue that we broke out. I think, for me, I need to see a little more movement to the upside to feel comfortable with it. But really, same song and same dance over in the Russell. A lot of room, very clear sailing, in my opinion, in the Russell, maybe the clearest. And they're all pretty clear in my mind. But definitely until we get into that 1560-ish range, 1550 to 1560, I'll call it, not really a lot. So again, if the bulls want to stay in charge of this thing, I'm not seeing, a lot of great technical reasons. Earnings overall, I think the market would agree that overall they've been positive. We've had some misses, we've had some lowered guidance, but we've also had some big hits. Some companies raising guidance, like AMD. We saw how crazy it went just on that, basically. So, news is there. If the bulls want to keep control of this thing, technicals in my mind are there. Plenty of room to the upside before we start to run into resistance zones that could be issues. But hey, we've been taking them out, and they're a ways away. That's the great thing. So whether they're a big deal or not, if we can cleanly break throughout the indexes, and kind of step one, we've got the Dow through there. Step two, we're knocking on the door on the Russell and the NASDAQ. And the S&P not all that far behind, right? So certainly, a very nice day for the bulls here today. As we kind of shift into our sectors, the material sector had a nice little run here today. Did sell off of the highs, but really carrying through with the movement that we've been seeing this week in particular. I know we got our doji and our gap on Friday to kind of get this going, but really, it's been this week, in my opinion, that we've seen that nice movement. Again, really not a lot here has changed. Still a little bit of room to the upside in my mind. A very clear, this is support. I'm bullish until this breaks, or I turn neutral until this breaks. And hey, Shirley, good to see you. Glad to have you back. I hope you are doing well. Hope you were out doing fun stuff in your absence. But great to see you as always. So still room, showing some decent strength, starting to pull away a little bit, from support to resistance, over in the material sector. But it has been a very solid area this last little bit. Energy still undecided. Now crude, and we'll get there, but crude knocked on the door at 55. I think it got to 54.90 something before getting pushed down here for today. That's something, of course, we're going to be keeping an eye on. A lot of these energy companies are going to be reporting either Friday or next week. So we've still got a lot of earnings on the energy front that may be what needs to push this one way or the other. Regardless of that, we still, in my mind, are in our same little trading range. We still have to think about what 65 means to us. You guys know what it means to me. It scares me until it's gone. It's going to keep scaring me. Lots of earnings yet to come over in the energy. But as far as, price action today, yeah, they did kind of roll with the overall market. It was going to be hard to not do that today with the way that things played out, but really hasn't changed technically. In my opinion, we're still in that same little sideways range that we spent the last little bit in here. Financials still kind of smacking into 26. Like we said yesterday, that's not necessarily a bad thing. I mean, they were a runner, right? And so maybe a pullback or a consolidation period was exactly what they needed. You have Aflac coming out with earnings here, either tonight or tomorrow before the open, I believe. So still a few earnings in the financial sector, but really to me, it seems like we're just kind of pausing, consolidating after we saw a lot of, charts that look like this, of course, but financials were kind of, mid-month kind of leading the way, right? And so maybe they need a little time to hang out, reflect. The longer they hang out without pulling back, though, the more excited I get about a potential break, personally. So the number's still at 26, 25 for support, and a little bit of room to run. We'll have to deal with that, this 26.50 as a potential, roadblock. We have seen price action there before, so that might be a level of resistance that we want to keep an eye on. But beyond that, much like the rest of the market, has quite a bit of room to wiggle. Now, of course, Boeing, big day today. Dow Jones, breaking out today. No surprise that we're seeing good movement over in the industrial sector today as well, taking out that last kind of maybe, right? Maybe that's resistance, right? That, who knows? It's not resistance until it pushes you down. It's not support till it pushes you up, right? But we kind of bumped our head into that price a few times over the last week. Today clearly have taken it out, in my opinion. Still room to go until we work into, this 200, kind of the next stop. It's going to line up with an old low, an old high. So to me, that's kind of the next place my eyeballs are kind of drifting towards. As long as we hold this breakout, I don't really see any reason why we're not working into those areas. I will continue probably to like the industrial sector quite a bit as long as we hold this break. Technology, it broke today. I've been a little conservative on that, and I'm okay with that. Today, we did break cleanly, taking out that high that we put in just last week. So again, another strong, or at least another bullish signal, however strong you or I may individually want to label it. A break of resistance is always some sort of a bullish signal, right? Another one over here in the technology sector. So just getting in with everything else. Again, not a lot in its way. I mean, anything can develop. Something very well may develop. But as we kind of look at where's the next stop, a high back here. I mean, there's really not a lot of anything in my mind that's a very, very strong, worrisome level of resistance. And I don't really even have to think too much until we work up into the mid 69s. I don't see anything that would scare me off in the tech sector. Saw some nice movement in the staples sector. I do think that more folks are getting interested as it's kind of shown some upward movement off of that low point. I still am not. There are other more appealing areas to me from a directional point of view as a whole. But I certainly understand it's certainly continuing, much like the rest of the market, is showing those bullish signals. Hasn't broke resistance. We found other areas, other sectors that clearly have. I think if we are looking at this as something maybe we're looking towards late in the week or early next week, with where we are from a price perspective right now, probably for me at least, breaking that resistance. But again, there's just, now I have to worry about that falling 50. I am going to worry about it. Whether I should or shouldn't is a different conversation. But exactly, Zach, it just hasn't been very well behaved. It doesn't seem to know where it wants to go. And maybe that's its fault. Maybe it's not. And maybe that's just a you and I think. Maybe everyone else got a great read on it. And you and I are the ones saying, well, I don't know. You're confusing me. Whatever it is, I am with you, Zach. Bare minimum now, with where we are from a price point of view, I think you need to see a break of resistance to get risk to reward. But for me, we break that, and then we have to deal with the 50. And that would be, and again, that will concern me whether it should or shouldn't. We could debate that all day long, but the reality is it will. So, and then of course, this trend line acting as potential resistance, that will concern me. So, I get it. It's seeing some decent price appreciation over here. And so I'm not bearish on it by any means. I do think you could say it's a bearish signal if we take out this low from earlier in the week now with the price appreciation we have seen. but we're a ways away from that even theoretically happening as of now. Not bearish, but I can't really say I'm all that bullish on it. Utilities, kind of a similar situation. After breaking out last week, baking out on Friday, and bumping our head into that resistance, Monday and Tuesday, breaking back above it, cleanly back above that resistance level here today. You probably, again, much like staples, these things, the swing high that we haven't broke yet, the falling 50, the trend line, these things probably either concern you at least enough to scare you off like they do me, or they don't, and you're probably liking the bullish signals that you're seeing. And as long as you're following your rules and your system design, then that's fine. It really is. It's always a good thing to be following your rules and your systems. But again, much like everything else, if we're going to a risk-on environment, even if utilities want to run, there's just things that don't have these scary moving averages, trend lines, old levels of resistance just looming over me. I always hate that. I'm a wimp, so of course I always hate that. But a good, solid bounce back day, no doubt about it. My opinion notwithstanding, definitely positive, being able to close back above. Now, again, I think we can kind of look to this low that we put in early this week as that short-term support level. If that breaks, that might be a bit of a sell signal. Again, we're a ways away from it, may or may not ever happen. But I do think with the way that prices developed off of that low, we can start to look at this as a pivot or a swing low, whatever you want to call it. Over in healthcare, again, these guys are going to be a little bit wonky for a little bit longer because lots of earnings, and they were definitely mixed here today. Solid day, closing back on the right side of that $89 mark that we've just seen so much history, recently at. Definitely a nice step, no doubt about it. More earnings to come. In my mind, the break has been the better signal, right? And that was, with all the earnings, that was almost how it was destined to play out. A break of this resistance at around $90 would be, in my opinion, a very interesting bullish signal. Right now, we're too close, for my taste. At least as I look at the ETF, that wouldn't stop me from an individual stock or anything like that. I think we can also really kind of say, hey, this is our support, these lows that we put in. So we kind of know where our numbers are. At least I think we do. I think looking at that 90, I think it's time to get rid of that steep trend line and replace it with this guy right here, based off of these lows from the last two trading days, puts us around 87.50 as a support level. So definitely nice movement, still some earnings that can impact this one way or the other. For me, the break of that resistance level just going to be a much more clear signal at least from a bullish perspective. For me, you don't have to agree with me. Our good friends over in discretionary just kind of doing their thing. They're one of those areas that have lots of little challenges as they work up towards, that 112 high. 108 here is where our 200 average is about approximately. Definitely something worth keeping an eye on. We have seen, if anything's going to cause a problem from a price history perspective, it's probably this range. This was a major top. This was a major breakout. This was a major bounce off of a breakout. And it's not overly concerning to me, but we've seen a lot of price action at that 108 range, which is lining up pretty nicely with that 200-day moving average. Again, if anything's going to be a resistance zone that can maybe force a pullback or something like that, that would be a price that wouldn't surprise me. Beyond that, 110, not much between 108 and 110, not much between 110 and 112. And realistically speaking, if we are able to continue this momentum past 112.50 or so, nothing until 115, and then nothing into 117.50. So lots of little areas that we'll want to be keeping an eye on as we continue, if we do continue to move to the bullish side of things. A lot of little things, a little bit of history where we're about running into right now, but still overall showing a lot of solid movement over there. Our friends in real estate ran into that 34. That's where they called it a day. I want to go in just look at let's look at the 15-minute chart here. It was doing well before, the Fed speak got going on, ran up into that 34 range, and then just kind of thump. there's a lot there, right? We talked about that before. That has been a little bit of a big point of resistance back here. We went sideways there for quite some time. It doesn't seem like it, and the summer was a long time ago, but we did spend around a month using that 34-ish resistance before breaking out right before we sold off. So 34, break of 34, probably a very interesting bullish signal. Probably with the way we are so extended to the upside in real estate, a lot of these things have made new highs. A lot of them have hit a new high every day over the last few trading days. But I think a consolidation period or a little pullback would be healthy for the real estate sector. Not that I want to bet against it by any means, but I mean, this is quite the run that it has been on. We're at an old level. Definitely we've seen history and pretty significant history, in my opinion, at 34 or approximately 34. Something to be keeping an eye on. A pullback into 33.50 would be fantastic, especially if it was a 2-3 day pullback scenario. That would be fantastic. That's what I'm asking for. We'll see if I get it. So, and lastly, communication services haven't done enough to change my mind yet. Facebook did come out feeding the earnings here, and the initial response was certainly positive. That can give us maybe a little bit of a kick. Again, you probably already know where you stand on this thing, just like you guys know exactly where I stand on it. Got to take out this high. It just has to. There's too many things that I don't have concerns. So I'm not going to go chasing communications. I'm not going to go chasing communication services. If there's areas that I think have easier paths, of course, they're the areas that I'm going to go. Doesn't mean I'm right necessarily, right? But I've got to pick and choose, so to speak. So I'll continue to be looking at this very cautiously. If we can hold this support, if we can break this trend line, if we can break this high, and Facebook alone is probably not going to be able to do it, but it's going to be a good start. Google's earnings, of course, next week, they will have an impact as well. That would be an actual very positive development. And with these type of stocks and this type of a technical pattern, why do I need to rush into it? I buy it today. Zach waits and buys it on the breakout, and it ends up being bullish over the next quarter. Zach, there's a lot of room to the upside for both of us, right? We're both probably pretty happy with the way it all played out. So why not be comfortable is my take, and it's always my take. So I'll continue to watch that. I'll continue to tread lightly with this sector until it proves to me that it's cleanly broke resistance, and I will be a boring, broken record every day until then. So but certainly it got in on the action today. Of course, a nice solid day in the market. Some dovish comments, VIX dropping down a little bit. We're really kind of starting to stabilize in the short term, kind of developing a little bit of a 1720-ish range over in the VIX. And really, to me, the big takeaway, and we've seen it, and the reason I don't really use the VIX a lot in my own personal day-to-day trading travels is because I think the broad market and the way it's moving is, for me, it makes it easier to kind of gauge increasing and decreasing momentum. Again, that's just me. There's nothing wrong with using the VIX, but we've seen the same thing over in our indexes, in our stocks. Those ATRs have moved down from where they were. The volatility is just not there as much, no doubt about it. Of course, we have dovish Fed speak. We go bearish on the dollar. It really was kind of trying to bounce off of this little floor that we've been hanging out on the last 2 days. We've seen a couple of shadows there. We are not quite sure, at least I'm not quite sure if they matter or not, but whatever, they were cleanly taken out, working into that 200, catching a low there, getting a little bit of an intraday rally, no doubt about it. Again, I still think you're looking at this, bearish, neutral with the side of bearish until we, establish a higher low, break some resistance. Right now, we just look at this, and this is probably the best way to do it. We are making those lower highs and lower lows. That 200 will be interesting to see how we play off. So exactly, Zach, and that's the thing with everything. It's not just the communication services, when things, we get so caught up and afraid that we might miss something today, and we're all potentially, can be guilty of it. There's no one that I know that can be immune, present company included. There's room on these things, right? And it's usually, If I don't get in today, it's not the end of the world. Good chance I'm going to get another opportunity. And if I don't, so what? There's lots of other things out there, right? There's no reason to go chasing, being uncomfortable, breaking rules because you're afraid that you'll miss the boat, right? No reason to do that. There's always another opportunity. We usually run into more opportunities than we can take advantage of anyway if we're following the market on a pretty regular basis. So I'll be very interested in seeing how we respond off of this 200. If that's certainly on an intraday level, it was a bounce. Next real level of support, of course, is going to be down here around 95 to be looking at from a price perspective. Well, there you go. There's me drawing lines again. So if we do give out on that 200, probably realistically are going to be testing 95 unless something new develops. So I'm going to continue to be neutral overall. I'm not very aggressive when it comes to currencies, but definitely keeping a side of bear until right now, with the way the chart looks, above this swing. Maybe some folk will be looking at this as a pullback opportunity, and good luck to them if they do. I will not be one of them. Over in the metals, so much easier to read in the metals right now than the dollar. And that's the real thing. You go where the read is, right? Continuing to move very nicely. Again, dollar down, metals up. That's not uncommon at all. And definitely jumped very nicely here today over in the gold market. A lot of room still to go. A lot of room. We don't really have a lot of resistance until we work, and that is a lot of resistance. When we approach that 1360 zone, we'll want to keep an eye on that because there's a lot of history there. But between here and there, really not much major, nothing really major in my opinion. So it continues to show a lot of bullish signals over in gold. Silver, definitely a nice little move here today as well, clearly taking out that high, running all the way back up, closing above 16. So a nice psychological win. I think you got to be a little careful technically if you're not in silver and you're looking to get into silver. We've got a long developing floor, right about where we closed the day. So if I'm looking to move into silver, if I'm already in it, I'm just going to monitor it. I'm not going to get out necessarily. But if I'm looking for a new position in a chart that looks like this, just going to make sure it pushes through. I'm not going to have to pay a whole lot for that confirmation. Maybe this pushes us down into a pullback and I'm able to buy at a much lower price. So keep an eye on this old floor. We ran right into it here today. Strong day for sure. Closing above 16. Definitely a positive, overall positive situation in silver. But, let's keep an eye on this floor. If this can break, again, much like gold, there's room. Right? There's going to be price history all over the place, but anything significant, maybe $17 will be something that we'll want to monitor. $17.50, the next big one that jumps out to me at least. So good, solid day over for the metals. And you have natural gas, who you just look at because one of these days you're going to look at natural gas and there's going to be a great trade setup. It's very unlikely it's going to be today, right? At least that's how I've been approaching natural gas for months now. And I'm going to be doing it again tomorrow. Really not a lot to see. We're continuing to try to hold in this old support zone, but really it's very all over the place. Continues to be a very volatile market from a swing trading and an intraday perspective as well. No real clear signals one way or the other. So, at least for me, see you tomorrow. And realistically, don't make a huge gap next week, and then maybe we can talk. So exactly, Zach, it's a beast right now. It is an unruly monster. And I know some intraday traders who are really having a good time with it right now. And I can understand why. More swingy type of traders like me, like Coach T, we're just, we both call it untradeable. So, and I know not everyone's going to agree with that, but I know I certainly feel that way. And crude. Very interesting. Yeah, exactly. I gave up on that a long time ago, Percy. So it's gold. It should be up there. It's its own beast. It really is, and it can go into those natural gas. I mean, this is a pretty extreme example, but it can go into these pretty wild, moving periods where you just want to leave it alone. They call it the Widowmaker for a good reason, no doubt about it. Crude knocking on the door of 55. We ran right up. What was our actual high? I think it was 93. Yeah, 54.93, the high point of the day, pushed down off of that. Let's just come into an intraday just to give us a little bit of perspective there. Nice solid run. We get to 55 and get the heck out of here, right? At least those short-term traders, of course they were. Of course they were. That was the percentage play, right? Especially the first test of 55 was going to likely push us down in the short term. And that's exactly what it did here today. Now, not much, and that was just an intraday pullback. It didn't even change the intraday chart. Still bullish intraday. It's time to be, thinking about what, if anything, you're interested in if we do take out 55. Everybody, in our tackle trading team, everyone knows that we're all kind of looking at 50 and 55 as the numbers. It's just really what do we want to do if and when either one of those are broken, right? Knocking on the door, this should be a challenge, but that doesn't mean it can't break it tomorrow, right? So definitely time to be thinking if this is an area you are interested in. If we do break to the upside, how would I like to play it? Futures, the ETF, just hang out and watch. I'll be watching, and I really don't see much until we work back into this trend line and this old support level around 58, 58.50. So that area will definitely be something. Again, this is a pattern, I really always am watching for, and I have a long-term trend line, and it ultimately gets an opportunity to test as resistance. That's always something I'm going to be looking at. So that's going to put us around 58.50, thereabouts. As we get closer to it, will get us a number if that's the way that this wants to go. But really, between the break, if we get it, and that old support / trend line, there's room. So there's definitely some room. Nice little rally over in crude. Of course, this is a big challenge, and I'll believe it when I see it. Right? Let's see it. But hey, we're close enough. And when it comes to breaks, you got to be ready, right? So you can apply your rules to get into them. So really fun day in the market. I've been enjoying myself because I really like earnings movers. And so during this boring market, I've not been quite so bored. Up until today, we spent a little bit, great part of the last week or so within a really fairly tight range. And so from a broad perspective, but definitely nice to see some movement in the overall market. I wanted to take just a quick peek at Boeing, just something to be kind of thinking about, gapping up, really strong earnings, working into that resistance level. Called it a day there, understandably so. That's a big move for Boeing, right? That's a big move, but we are challenging those that all-time high, and so I'm really interested in seeing how this one develops in the days to come. Do we get a little bit of a pullback, consolidate, or do everyone take their profits and call it a day? I guess only the future will tell. But yeah, I'm not sure what happened with Walmart today from a news perspective, Fortino. But if you look at it from a technical perspective, we come back into yesterday. So I don't know if there was any news. I did not look. We kind of established that little upward movement, or we tried to yesterday, and then we took that out early, and it just kind of, sometimes it snowballs. So I'm not sure if there was news that got into it, but if you think about this just from a pure price action point of view, let's see if I can get a line on here. We'll look at the intraday. We had what looked like a bullish, pullback type of a situation, and we saw a little bit of upward movement. Yesterday we gave it back, but we saw it before we did give it back. But then all of a sudden, you see this break on the intraday. And if you look at this, just think about this as a chart and not anything, specific, Fortino, as we're kind of seeing this going back in time. We're below, our averages, except the 200 period. We're kind of getting bumped into that falling 20. We've established a little bit of an intraday floor. This was an old level of resistance. If we kind of come back, so if we just think about this as the chart, hey, Walmart broke out, it pulled back to the breakout point. Buyers came back in as confirmation, placing their stop losses below that breakdown point, breakout point, that falters, and selling comes in. So I think, maybe there was news that prompted this, Fortino, but I think we can explain it through the price action as well. So maybe that news, if there was any, maybe there wasn't any. This stuff just happens too. But maybe that news kind of prompted it, but then everything kind of, has a bearish signal there. So, and lastly, let's take a quick look over at Weight Watchers here. And let's go back into our daily time frame to get us rocking and rolling here today. So looks like it's, I wouldn't say for me it's quite there yet, Zach. Again, there's so much room on this to the downside that I would want to see it kind of take out that pure low. And I think that's going to put us 3180, where is that? 3072. So I'm going to come into an hourly chart again, just to kind of take a closer look at this here, Zach. And I agree with you from the overall perspective. I mean, yuck, right? So yeah, and sometimes they do. Sometimes they do, and sometimes there's a reason that you can read about at least, and sometimes that's just the way that the day goes. Sometimes that's just the way the price action develops. The simple truth is that, Fortino, a lot of times if we're hanging out looking at that Walmart intraday at the time that the market's starting to show strength after that Fed meeting, we've got things that are breaking out, right? We've got a Boeing, we've got Apple, who fought all day with the 50-day moving average until that happened, and boom, a really easy entry, at least from a day trader's perspective. So why kind of I don't want to use it, but I'm going to use it, bottom fish for the day on a Walmart who was showing a lot of weakness for whatever reason it may have been. So hope that makes sense. Over in Weight Watchers, Zach, I think, again, for me, we're just not quite there. I want to, I'm very, conservative in that regard. I always want to be sold that it's broken, what break down in the case of Weight Watchers, break up in the case of whatever else. And since we haven't done that quite yet, in my mind, I'd want to see a little bit more downward movement before I would consider it. So I hope that gives you some ideas there. And lastly, I said lastly, but let's look at one more. Let's look at Apple, because this was funny, a funny way to play out. And then we'll take a quick peek at the SPY here, Shirley. Here's Apple, of course. Not the greatest earnings, but responded to positively. And that's how I always look to interpret earnings. How does the market respond? Because nobody cares about how I respond. I'm one dude with an opinion, and it holds no sway. So, I'm just, I'm always interested in how the market responds to that price action. Of course, here's Apple gapping on the open. The top there is going to put us at our 50-period moving average. It bumped its head all day long at that 50. Then Fed announcement comes out. Boom, we take that resistance out. Very quickly, we're on a 15-minute chart. So if we go into a 5-minute chart, maybe a little easier to see. Oh, hey, there's a breakout candle. There's a trading signal, and the traders move on in, right? And so again, Fortino, when you kind of think about why go with something that looked like a Walmart today versus something that looked like an Apple, just because this is an easier trade. The Walmart trade just would have been a harder bullish trade because the signals weren't there. This was a good signal regardless of the why, right? Oh, hey, nice gap up on earnings. Go into a sideways pattern for an extended period of time, break above that as confirmation, and here we go as a potential buying opportunity. So I did find it humorous that that's exactly where it opened, smacked right into it on the open, and really spent most of the day there until it didn't. As we look at the SPY here, hey, good. I'm glad you made some cash today, crypto. That's what I'm loving to hear. And you're looking at 282 on the SPY. Yeah, and I think that's a fine number to be kind of looking at, Shirley. I would be looking at more towards 280, to be honest with you. That this was a big deal. This was a big deal, back before we broke down, when we first started selling. We really started to work into that 280. So in my mind, that's a lot more significant than the 282. So for me, that's the next real level that I would be looking at. I'd be keeping an eye at this old support zone as a potential short-term level of resistance. I'm always keeping an eye on the 200-period moving average. But as I've said many times before, if it's flat, then I'm gonna note it. I'm not going to ignore it, but I'm not going to be overly concerned about it. I'm really going to be more concerned about that. If this was a falling 200, I'd be thinking, hey, that's resistance. That's where you take your profits. But with it flattened out like this, I would not really be overly concerned about it. But I will always keep an eye on it. So for me, the real big one, though, if we are able to continue this movement, is going to be about 280 versus the 282, Shirley. Does that make sense? You don't have to agree with me, but I hope you can see where I'm coming from there. So it's going to be an interesting year. It's going to be an interesting year. And I don't, I don't ever think about what's going to look like in July crypto. I think about what I'm a step-by-step guy. There are way too many steps between here and July. So at least for me. So I'm thinking one step at a time. Hopefully that, yeah, exactly, Zach. So exactly. So there's definitely some truth to that. When it's flat, it's just not, at least in my opinion, as significant. So we will see where this takes us. So it's going to be an interesting. We still have lots of earnings, and these guys can definitely. I mean, they can add fuel to the fire, or they can throw some ice cold water on it. There's definitely, we're not out of it. There's still plenty of news. Jobs report on Friday. Lots of earnings yet to come just this week. Still plenty next week as well. But as of right now, our short-term signals continue to show to the bullish side. So we will have to see where it takes us going into tomorrow. So ladies and gentlemen, that is going to do us for the market recap today. But as always, it is certainly my pleasure, and I do appreciate everybody's time. It's always great to see you guys and get to hang out with you, no doubt about it. If you are new around here, be sure to subscribe to the channel and hit the notification bell, and follow us over at Tackle Trading on Twitter as well. Make sure you don't forget about Coach Mark's Mind of a Trader, Talking Fed tonight, not only for our pro members, of course it is for our pro members, but for anybody who wants to join us, head on over to tackletrading.com, get in there, hear what Coach Mark has to say. He loves the Fed stuff. He's a news junkie. Coach Mark and I have fought many times over how to interpret news. And I think we agree to disagree, but I always love getting Mark's take. It's always a lot of fun. So be sure to check that out. And if you enjoy the market recap, it is always helpful and appreciated if you do give it a thumbs up to let us know that it's helpful, to let YouTube know that it's helpful. And thank you in advance for that. So, hey, guys, it's my pleasure. You guys have a wonderful afternoon. Get out of here. Happy trading, and I will see you all tomorrow. Bye, guys.